Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Wednesday, June 6th. Greetings from New York. Let's take a look at the NASDAQ market, and buyers did come back in here. We were looking for Monday to be a rest day, Tuesday to give us follow through, but we're not out of the woods. Right pieces, right places. As I mentioned in the advanced video, we got a lot more work to do, and the next 2 to 5 days are going to be very important for us as we're going to monitor how this market moves. In the currencies, well, we see here in the euro that the market did try to rally, but it failed to give us that kind of follow through. This is bearish. We'd be looking for a down move. My bias is for this to go higher, but price wise, this says we should be going down today. That's what we're looking for in the Swissy too. Now, in Japanese yen, we did back off. There were some comments made in Japan. We can see how the market reacted to that. But the difference here between that red line and the green line, that sell level and buy level, and again, I'm just trying to give you an idea of how these markets unfold. And these provide references from my perspective of what I would look at. I'm not suggesting you should do this or that you would get this return. Now the difference here is 125 ticks. Each tick is $12.50. So that magnitude of change would be $1,562.50. That would be the magnitude of change here. Now also there's micro contracts, which would be 1/10 that size. So they would be 1/10 of that return that we're talking about there. That would be another way to gain exposure to the currency markets. Let's move on though. Let's take a look at those interest rates. And we can see in the notes they also traded through the sell level. The difference between the buy level and sell level in the notes is 35 ticks. Each full tick is $31.25. The dollar value would be 35 times 31.25 or $1,093.75. Again, not suggesting you should get that, but want to give you a feel for it. We are looking for continued downward pressure in these interest rates in terms of price. That means higher yields. In other words, the difference here in bonds between the sell level and the buy level, and again, these are just references, is 116 ticks. The value is 116 times 31.25 or $3,625 would be the dollar change here in the bonds. In the metals markets, I'm looking for a sideways market. I want to point out to here in copper, the market did trade above and below this buy level and below that sell level, and it failed. It did not reach magnitude objectives. It would have reached risk parameters. So this would have created two losing positions here in copper, conceptually. Let's move on and let's look at energy. Natural gas did trade back up through this buy level. The difference between the sell level and buy level there in that market's 18 cents. The dollar value of that change is $450. And again, I'm not suggesting that you should do this or you would get that kind of return. But what are we looking for? This is in a tough spot actually. We're looking for some follow through to the upside, but nothing to write home about. Not a dramatic move. And in the grains, now in beans they did trade through this buy level. The difference between the sell level and buy level there is 10 cents. Each full penny is $50, but you can also trade a mini contract, which is 1/5 the size, so that would be $10. But if it's a full size contract, 10 cents would be $500, would be the dollar of magnitude change for that market. And I'm looking for, in beans anyways, a little bit of more buying to come back through for that market. The next 2 days for that market is also important for us. Well, that concludes today's market studies. Thank you for joining me. Looking forward to being with you again, and in the meantime, take care.